should hopefully, yeah, there we go. Sorry about that. Looks like my sound is back there. Sorry about that. I had a little bit of a, right before we came on the air, I lost the cookies in my browser and I had to go get them back. So I appreciate that very, very much. Thanks for indicating that. I think I've got that taken care of now. So, I don't know what causes this off. I just don't know. No idea, no idea. Okay, yeah, can't hear you. All right. All right. I need to check with my next not muted. Absolutely. All right. So let's look at INTU and Datadog. That's interesting. Let's look at Datadog. All right. Come on. Datadog. DOG. And that's not working either. Okay. Maybe a second time's the charm. Hold on. Hopefully we're going to get this up here. There we go. Boy, I tell you, it just does not want to respond. There's something. Let's try it again. All right. Okay, Datadog. I'm trying to get Datadog chart for Datadog up here. Hopefully we will see it. There we go. There we go. So now I think we have the Datadog chart. And let's take a look at it. Boy, I tell you, not a good situation here. Possibly a short. I'm trying to think. I probably wouldn't short this one here though. It's a little bit down. That was the death cross, of course, way back here in April, and it did make a move to the 50-day line. Relative strength is 23. Just not looking like a good situation here. In terms of that, checklist 67%. I just think you got to pass on it. So I would pass on Datadog. Just the overall chart doesn't really look very good here, unfortunately. All right, there we go. Hopefully we'll get these. So I would I would skip this one. I think it just doesn't look good, and so I would skip Datadog. It's just not. This is just not looking like a very good chart, and it's in this market. You just don't want to buy. I'm trying to buy the best stuff that I can find, and it's not easy to find good stuff. So, is the sound still not working? It should be working. Let's check again. I'm having some problem with I'm going to be moving offices, by the way, because I have a lot of trouble with internet here at this office. Yeah, it should be working. Okay, that should be working. All right. Go to TikTok. Okay, sorry about that. It's working now. There we go. Okay, so we're good. We're good. All right. Let's look at GLP. Is that going? All right. And global partners, gasoline. Okay, so it's the Northeast. So it's sort of a, yeah. There we go. All right. Yeah, nice reversal. 80 relative strength. Let's go to the weekly chart. See if we can kind of get a look on that. Yeah, it's nice. This is actually a nice chart. It looks like it gapped way down and it's now getting some strength, kind of wedging. Well, you know what? It does look, we are getting some nice increases in sales. Profits are good. The group area, refineries, I like that actually. This isn't bad. This isn't bad at all. I don't know. This is a good question on this one. Would I buy this one? It's a little bit volatile, but it does look like it's getting support and moving higher. I really like this relative strength line. It's excellent. 80 is the relative strength rating on this one. Yeah, I definitely think you could nibble on this one. I would. You could probably do you could probably do a half position on this one. So I don't like buying it. Here's the thing. I don't really like buying it below the 200-day line. Here's the thing. I would wait for it to move above the 200-day line. So I would wait for this one to move above the 200-day moving average. So that's what I would do. I would wait for it to move above that. I would wait for it to move above the 200-day moving average. Come on. Yeah. So I would wait for it to move above the 200-day moving average. I wouldn't buy it here. You got to, this is a tough market. I think entries are so important in this market, and it's just, I don't know, it's just really tough. What is your philosophy about owning a stock during an earnings announcement? Very good question. Here's my philosophy. I typically like to be at least up 10% before an earnings announcement, or else I will sell before the earnings announcement and then buy back later. And the reason I do that is because of volatility. The best thing to do is, if you're not up at least 10%, sell it. Then wait for the earnings, and then you can buy it back. There's no problem in buying it back. But having it lose all of its mojo is not a good thing. So going into earnings, if I'm not up 10%, I generally sell. And there's just a lot of reasons for that. Even I just like to have that cushion. I think it's so important to have that cushion going in, because obviously if it's a winner, you want to hold on to it, but you don't want to lose all of your profits. So if I'm not up 10%, I sell it and I take the profits. I wait for it to come through, and then I hit it again. So that's sort of my philosophy on that. All right, let's look at VERU. Okay, VERU. Yeah, okay, interesting. Not a stock that I know much about. Consumer contraceptive products known as a female condom. Oh, I don't know. 99%. Huh. It's in the right area. I mean, medical products are definitely a place to be. Gosh, I just don't know about this one. Here's the thing. I'd be a little bit careful about this. It's a little thin. And I just would wait to see if it moves above 1750. And it definitely is getting there. So I would wait. I would wait for it. So I would only buy this if it was making a new high. I would wait on this one until it made a new high, and then I possibly would consider buying it. But I probably would not buy it here. All right, the question is Google a buy? This is a good question, because as you know, Google split 20 for 1. So let's take a look at Google. And the symbol that I'm using is GOOGL. There's also GOOG. There's two classes of stock, and they both split. But let's look at Google, which is alphabet class A. That's the stock that we're looking at. And as you can see, it's now trading at 109. You go, wow, it went all the way. Well, it split 20 for 1. This is always interesting, and I always like to point this out. You notice how it's going down. This is very typical. And I've been saying on this show for a while, the best time to buy Google, the best time to sell a split is the day of the split, because usually it goes down. What's going to happen in the next few weeks is that people are going to be selling off their excess. So they're going to have additional shares, and they're going to sell them into the market. So this is going to cause downward pressure on the stock. The rating up currently is 44. I mean, this is a good stock. I mean, don't get me wrong. I'm not ragging on it, but right now, it's pulling back, and I think it's going to pull back probably for at least a few weeks. So right now, Google is just not a buy, and that's kind of a strange thing. But typically, the way Splits trade is that on the announcement of splits, they'll run up. And then on the day before splits, that's going to be with their highest. That's a good day to sell. And then usually what will happen is that several weeks or months after the split, that's when they start moving again. So right now, Google is not a buy. And if you've been watching me for a while, you probably have seen when I traded the Tesla split, very similar pattern, but we were in a much stronger market. So currently, Google is not a buy here. I just don't think it's a buy here. We're in a downward trend on it. They split 20 for 1, and let's go back to the monthly chart and kind of look at that, because that's going to give us a very good viewpoint. Now, here's the thing: if you'll notice on this monthly chart, you'll notice how it pulled back to the 30-month line. This is and it looks like we may get a bounce here, but this is a test. The last time it tested was back here in 2009, 19. That was the last test on the monthly chart. Again, it tested here. There you go. And it tested here. You kind of get the picture. So basically, going back, if you go back in time a little bit, this is a test. Hopefully, we're going to see it move up here, but right now, we're going to have to wait a little bit, in probably about a month or two, and we will see it move higher. But right now, I don't think it's a buy. Just you want to make sure that it tests properly and it bounces off this 30-day line. That's really what you got to look for. Also, let's look at Amazon. That also is a split. AMZN, of course, is the symbol on that one. And let's go back here to Amazon. There we go. It also split. And let's take a look at that one. This one I'm a little bit more, I'm a little bit more bullish on, but I'm still not totally bullish on it. Let's reactivate the, there we go. What I'm doing is I'm reactivating the trend line here. And we are starting to trend up, which is nice. We do have a relative strength that's moving higher, definitely, but it's got a relative strength of 23. So I don't think it's time to buy this yet. I think it's just time to wait. So basically, with Amazon, just you got to watch this one too. Kind of stinks, but I would watch this Amazon, and I would not buy now. And the part of the reason is, when it splits and it has a huge split like this, what will happen is that the shares will get distributed, and then the people that own the shares will sell off some of those shares, and that creates downward pressure, usually for a month or two after the split. And that's definitely been the case here with both Google and Amazon. So those also are a great thing. Now we come to the Nancy Pelosi. Paul Pelosi, who is the wife of it's pretty much true. The husband of Nancy Pelosi has been buying NVIDIA shares. I don't know. It's crazy. It's like people on the Hill. They just don't. They don't follow the same rules we do. They don't insider trading. So I guess it's a perk of the job. You got to do that. I don't know. It's weird. But anyways, here's what's going on here. We got up nicely today. We tested the 50-day line, but we were rejected. I'm not really sold on buying NVIDIA here. I love NVIDIA, the stock, but here's the problem with NVIDIA. NVIDIA is, of course, the top in making GPUs, but they don't have their own fab capability, and that's becoming increasingly important in with Taiwan, the Taiwan situation. So I was very bullish on this. As you can see, I traded it back here, but I want to see this thing reverse course. I still am on the fence on this one. The problem with semiconductors right now is they're just the money still isn't moving into them. 150 out of 197. I mean, I definitely think it should be watched. I think you should watch this one, but I don't think it's ready to go. I don't think it's ready to go. So, again, another painful thing I would say is, and I've been like that's all we call, the whole show is that, I think, this is a watch list. And I'm going to watch this one. I'm not going to buy it. I'm just not going to buy it right now. I don't think this is a good enough setup. I don't think it's a good enough setup. It's a great company, but I don't think it's a good enough setup right now. Just tough one. Let's look at KZR. I'll take that one. KZR. Okay, I definitely like life sciences, biotech. Yeah. I wish I knew more about this one. The problem in bioscience, by the way, there are more companies in the bioscience area than any other stock area in the market. So that's one thing you got to really be you got to be really careful about, is that there's so many of them. Here's what I would recommend doing instead of buying an individual stock like that. I would look at something like the BIB, which is the ETF that covers biotech, and this it's kind of pulling back. So I don't know if I would recommend KCR unless you know a lot about it. Now, if you know a lot about it, it's a different story. But the problem is with biotechs is that they tend to be very, very hard to trade. Now, I do own one biotech, so here I am saying that I do own CRISPR, CRSP, which is a Swiss company that does gene editing. But it's totally on the it's a little bit different out on the pattern. I mean, now mind you, I did probably buy at the wrong place here. I bought at 82.25. It's pulled back 79.97. It's moving up after hours, but it's testing that 10-day line. So I'm fairly confident that we're going to see something nice here. But again, this is a much bigger stock than KCR. This is this is the much bigger stock with a lot more sales. So lots of sales here with CRISPR. I still think CRISPR. I am probably buying it probably a little bit too aggressively, but I really like this relative strength line, and I just like it. I just think that the funds are moving into this one, and who knows? I mean, it has a 19 PE ratio, which for biotech is fairly low, believe it or not. It's amazing how high they can be on the some of these biotechs. Let's look at Wells Fargo. WFA. Oops. Now, I would not be in any of the banks because I do think they're gonna see. Is that right? You know what? I can't. Should remember this. Hold on. I don't know why I can't remember that. I can't remember why it's I don't remember that. WFC, of course, is the symbol for Wells Fargo. There we go. All right. So for Wells, let's go back to the daily chart first. I just think they're going to get killed in terms of their profitability. I just don't think they're going to show good profits. We had it move up. Yeah, look at that. Earnings per share. Yeah, look at that. No, good. Down 23%. I think you're going to see more weakness in the banking sector because interest rates go up, the value of their loan collateral goes down. They have to devote more to reserves. I don't think this looks good. I don't think this looks good. Now, the trend on the relative strength line is down. It did pop up a little bit, but immediately it popped above the 50-day line, and then it just got rejected. So I just don't think you want to be in Wells. I don't think, especially with this earnings report down here like that, I just think you don't want to be in Wells. So I would be careful about Wells here. All right, KZR relative strength indicator is 65. Let's see what I got on mine. Mine's a little bit different because I use MarketSmith. It's a little bit different. The relative strength indicator is a little bit different on mine. Okay. ZR. Let's look at that again. And yeah, I have a higher relative strength. I have it at 89 actually. So I don't know quite. This is a little bit different. RSI is a little bit different than the RS rating from MarketSmith. It's a little bit different. This is showing a lot more strength actually. But again, I wouldn't want to buy it below the 200-day line. That's my big thing. It does look like it's getting some support at $10. You can see that here. But I don't know. I don't know. It's a good question. The question is, and this is the real issue here with a stock that's this cheap. It's not really buyable by the funds. There are probably some funds in it. Yeah, there's 200 funds, so that's a lot. But typically, many of these funds will not buy below $10 in terms of price. Of course, this has been right about $10, so it hasn't been. So some of the funds are in it, but it does look. I mean, looking at this chart, I mean, I can see a little bit of weakness. I mean, there was a gap down here, and then we based there, and then we shot way up, and then we're coming back down, getting some support about $10, $9. We're coming back up. This is wedging action. This is what they call wedging action. And so this looks like it's losing. This looks like it may be in danger of moving lower. So I would not be a buyer of this one just based on its chart. Snowflake, I actually have a short on this one. Let's take a look. SNOW. I have a short on this one. I don't know if that was smart or not, but it was off today, so I think it was smart. I definitely have a bear put spread on this one. I do think this one's going down lower. Let me see if I can show you where I put my short. Markup tool. There we go. Well, heck, I thought I had marked this one up. Let's see. I definitely have a short on this one. Yeah, I definitely have a short on this one. I wouldn't buy this one long. I do think it's going lower, as says here. Let me see if I can find how I'm looking on that short. I'm going to pull up my little handy dandy calculator here, and that would be on Bill.com, Starbucks, Snow. There we go. So I do have a short on this one. It's a bear put spread. I probably entered it a little bit too early. Currently, the value of the trade, I'm about down $52. I do think this one's going lower though, so I'm looking at this one to go lower. I will base my break even on this one. Basically, is 140. We're up there at about 145, so we do have a little bit of ways to go on this one. I still think this one is going lower, and I'm looking to it to go to about 130. I'm looking at in about a month, so that's where I'm kind of looking. I think we still have a downward. I think we still have a downward trend on this one. I have a short on this one, so that's kind of my view on it. Will it move higher? Who knows? But I do think that this is kind of a classic, one that went way up here. It was at 405, and it's lost. I probably should. This was the rate. This is the best place to short here, but I do think that there's still some juice left in the tank here, so I have a short here. But I basically won't make any money unless it goes below 140. But I think there's a chance of that because of the way it's been falling. So that's my take on Snowflake. I think there's a lot of institutions in this one, and they're going to probably have to get out as well. All right, let's take a look on NEO. The real one here is Liauto, L-I. I am not in this one. I'm not in Liauto. I was in this one previously. I was in NEO previously. NEO, I don't know if they're able to deliver their vehicles. I think that Liauto is the one that's doing the better of the two. I'm not in any Chinese stocks right now. Let's compare. I want to compare Liauto. I want to compare NEO. There's really three Chinese automobile stocks. There's Build Your Dreams, BYD, there's NEO, and there's LI Auto. So let's look at LI. And let me see if I can put in, Build Your Dreams. I can't remember what the symbol is on that one, but BYD. So I have to look up because I don't remember offhand. It's changed on the new. It trades on the Hong Kong exchange, but it also has ADMs on the New York exchange. So it's BYDDY. Oops, DDY. So let's kind of look at the performance of BYDDY, right? Okay, is that right? Nope, not recognized. Let me see if I can get that right. BYDDY. Oh, nope, not recognized. Okay. Oh, DDF. I'm sorry, not DDY, DDF. BYDDF. That should give us that. There we go. All right. So let's see that on screen there. So basically looking at the three Chinese automobile makers, NIO is the kind of the run of the litter here. It's not doing as well as kind of zoom it up here a little bit. NIO, it's in a little bit of a downward trend as of late, just last 3 weeks here. Li Auto is the one that I think you want to look at, and then BYD seems to be outperforming Li Auto a little bit, but it's a little bit more volatile. It's been pulling back of late. So the one I think that you if you're looking for a Chinese auto company, if this Li Auto seems to be set it up much better than all of the other ones. So I'm gonna jump over to the I'm gonna jump over to the chart and see. So this is the one instead of NIO, take a look at Li Auto. I'm not in this one, but it's set up very nicely, and it's on the watch list too, by the way, for stocks. So Li Auto. Okay, well, come on. Sometimes it works. There we go. All right, let's see if this will give me. There we are. So I think this is the stock that if you're interested in Chinese auto stocks, I think that this one probably is your best. Now here's why I think that this is the superior stock. We have if you look at this is called the Golden Cross. All right. This is when the 50-day line moves above the 200-day line. That's very, very good. Also, if you'll notice, the relative strength is 98, and we have the relative strength has been going, but it's come out here as a little bit of a shelf, but it's trending up, and it's near its all-time high, 41.49 is its all-time high. So the question is it viable? Well, it's got an excellent checklist, 89. And the technicals don't look bad either. It's very close to the 10-day line, which is a good place to buy it. So I think personally that you could start a position not in NIO, but in Li Auto. That's where I would be looking. That's where I'd be looking to do a position. So Li Auto, is where you could start a new position. And I think this is an excellent place to get in. If I'm not in it currently, but I'm looking possibly to do a half position here because I think it's looking very good. I really think it's looking very good, and I think compared to the other stocks, this being NIO and this being Li Auto, I think it's the best of the bunch. And this is Li Auto here, kind of gives you an idea of how much it's moved up. So I think you could definitely move into a position here if the market holds. Now, right now we're still in a, we're still in the screwy uptrend. It's not really an uptrend. It's really bad, but tough. All right, let's look at LMT for finance fun. And LMT. Lockheed Martin. I wish this was looking better. This just is not looking too good. It pulled below the 200-day line. I think you just have to avoid it. it's tough to say that, but I think you got to avoid. So I really think you got to avoid Lockheed Martin for right now. I just think you got to avoid it. It's pulled below the 200-day line, and it's got a relative strength line that's declining. Earnings are in a day, just not something you want to do. I don't think that's the best way to go right there, right now. Okay, let's see what's hot for tomorrow for options. Nothing really on the screen. Is Google a buy? No. Will the market be tomorrow be green or red? Good question. I wish I knew. I think it's going to be mixed. I think the market is moving kind of sideways right now, and it's really tough market to trade. It's just really tough to trade. I want to buy options for SQQ. Anything I should be worried about? Absolutely. A downside reversal could be very, very, very. Here's the thing. I don't really recommend buying options on the SQQQ because it's leveraged, and I don't think it's a good idea to buy options on a leveraged ETF. So that's just my opinion, because if it goes against you, you could really get your head handed to you. So I would be really careful about buying options on the SQQQ. Remember, it's a leveraged ETF, and so therefore any market move is going to be magnified. Now, that's great if you pick it right, but if you pick it wrong, it could crush you. So I would be very, very careful about buying options on the SQQQ. Now, I would consider it on the QQQ because that's not leveraged, but the SQQQ, I think you got to be super careful. The best thing to do if you want to short is to go borrow. Your YouTube sound wasn't working. Okay, sorry about that. I should be. Did I go all this time without having sound? I hope not. Let's take a look. See if I'm. Yeah, I should have sound here. Well, I have taken up some of your valuable time here. I'm getting ready to sign off for today. Do we have any more comments? Thank you so much. Let's take a look at it. Bristol Myers Squibb. Yeah, let's take these other last ones. Bristol Myers, BMY. And this is in a good area too. BMY. I don't own it. I was in McKesson. I was shaken out of that one. Can you believe it? Yeah, I mean, this is an okay stock. It's a good stock. I don't think it's going to go. I don't think it's. I think for maybe a long-term hold, it's good. I don't like this relative strength line. It's headed downwards. You can see. I don't like that. We've got earnings, and I just wouldn't buy this one, Bill. I mean, not that I just don't like it. When I see a relative strength line moving down like that, I don't see a lot of conviction. So I wouldn't buy that one either. Terrible. Not buying anything. Apple. Let's look at Apple. APPL, of course. No, AAPL. There we go. AAPL. Next is Saudi Aramco. I think this is the largest cap stock on the market. And it is a monster. Basically, it has made this nice reversal, but here's the problem. Here's the problem with the stock. It's trading below that 200-day moving average. So it is starting to make a move up, but it's in this consolidation, about 182 at the top and about 129 at the bottom. So it is making this nice bounce, but it's pulled back to the 10-day line. So yeah, I mean, you could possibly put your toe in the water here, but I think you got to find something that's a little bit more exciting. I think it's better to stay in cash than this. So my opinion too. But I think that Apple, the winners of the last go round, probably are not going to be the winners of the next uptrend. We're not really there at the next uptrend yet, because we're still kind of looking at the spider pulling back. Let's look at the spider really quickly, and then we'll probably call it a day. But the spider here, we were looking so good, and then spider came right up to the reversal line, and it pulled down. So You know, the spider, which represents basically the broad market, S&P 500, it's still moving lower. So just not a great environment to be buying in. I'm buying a little bit, nibbling a little bit, but I'm mostly in cash. I'm mostly in cash. I mean, to kind of show you where I'm standing in the small portfolio, I'm pretty much 63% in cash. Can you believe it? And now, of course, everything I bought has been moving down. So maybe I'm not the right thing, but boy, oh boy, it's not an easy trade, not an easy market to trade right now. Well, I will be back tomorrow. Please, if you can, help me out here. Help me, Rhonda. I need you to like the show. That helps us so much. Please like it. And if you're not already a subscriber to the free Action Trade Alert, super easy. Just go to www.Dallas Trading Floor. I'll be back tomorrow at 5 o'clock with hopefully answer as many questions as I possibly can get to. Hopefully we'll have a little bit better action tomorrow in the market, and I will be seeing you tomorrow at 5. Thanks for tuning in so much. Happy trading.